Okay. On the NASDAQ, we do have pretty much the same pattern that we saw on the ES, okay? And that is we have pulled back to within just a few points of the ATR on the 1440. You see that we have flipped the ATR, we developed a congestion zone, and right now it's heading back towards the ATR at 3800. That's the difference in data between TradeStation and multi-charts. It will be different between TradeStation and NinjaTrader or multi-charts. All of these can be different. It depends on who your data provider is and what trading platform you are using. You have to trade what you see on your screens, okay? Now, in the NASDAQ 180 minute, you do see that we closed above the ATR, but we do have the congestion dot up here. The ADX is at 68, so we may actually get a magenta peak on the 180 today. If we do, that would cause price to go down, okay? And it would come back to this ATR and test the ATR. Again, if you look down to the 45 minute, you can see that there was actually no selling volume as this came back to the ATR. You do know that it's close enough to the ATR because this bar is gray, okay? Anytime the bar is gray, you know it is close enough to the ATR to take a trade. Does everybody understand that? So we may still go up to this congestion dot, but then we're probably going to get a retracement off of that congestion dot, okay? And I want to see what the spreads are real quick. I'm writing an article on gold, so I've been focused on gold. On the ES right now, the spreads, if you're looking at the spreads that expire at 10 o'clock, and let's go back to the ES because what you want to do is kind of shop around and see which one is the best price to get. Right now price is at 1931.50, so I would want the closest floor to that number. In this case, we do have a floor that is available at 1930. So if you were to enter that with one contract, you would be risking $30 to make $70, okay? That would be buying the floor, anticipating it to go up, okay? What if we anticipated it to go down? In that case, you would sell the ceiling, which they do have one at 1930, and your risk would be $14, okay? And let me capture this real quick. Okay, does everyone understand what I just explained about the floor and the ceiling? In other words, and I'm just going to actually put this over on the 3 minute, I'll put a horizontal line. Okay, now this can act as a floor or as a ceiling, okay? This red line here. So if you believe that price is going to move up, you buy this area, okay? If you believe that price is going to be below this area, and we have a market report at 8:30, so we're probably going to get some market movement in there after the 8:30 report, then you would sell this, and this would be your ceiling, okay? And this is what it looks like on Nadex. All I did was click on the bull spreads. Now, you can also opt, that's only one option that you have. Your other option is to do the 8 a.m. to 4:15. And again, you would look for a floor at 1930. And this first number here is the floor. If you believe that price is going to go up today, then you would buy that. If you believe that price was going to go down, you look for the number on the right. That would be the ceiling, and you would actually sell this, which means you would click on the bid side. Okay? Does everybody understand that? So, and you could actually do both as well. And that's one of the things that I like about Nadex. Let's say that we believe we're going to have movement in both directions. In other words, it's going to move down and then it's going to move up. Then we can actually do both. Okay, and you could do it on multiple expirations. You could have an expiration at 10 and an expiration at 4:15. All right, and we'll be, for those that are in the Kickstart Your Trading webinar, we're going to be going a lot more in depth on that next week. Okay, now let's go back and let's look at the NASDAQ real quick. Okay, so you see that the NASDAQ right now is, ooh, that's 3 minute. Let me get rid of that one. Okay, if you believe that the 3 minute is going to go down, you would look for a spread at whatever is closest to 37.79, and that would be your ceiling. Okay, if you believed it was going to go up, then you would look for a floor that is around this area. Now, for the NASDAQ right now, your current spread available for 8 to 10, you have one at 37.80, which is very close to price. Okay, so if you believed that price was going up, you would buy 37.80. Do y'all understand that? If you believed it would go down, you would sell. And again, you're looking for 37.80 on the right side, because the right side is the ceiling, the left side is the floor. Okay? Now, in addition to that one, you also have the one that expires at 4:15. Let's say that you thought it was going to move more than 10 points, and normally it does. Okay, the typical movement on the NASDAQ is about 15 points. So you could go out to 30 points for a spread. Again, 1930 being the floor if you're going long, or 1930 as a ceiling if you are going short. Okay? Oh, thank you. I thought I clicked on it. There we go. 37.80 is what we're looking at. Here's your 37.80 area, and here is your 37.80 area if you believe it is going to go up for the day. Now, these are really good for when you're expecting the market to trend. These are extremely good because you can actually capture pretty much the full movement of the day. Does everybody understand that? Well, the price that you pay is whether, in this case, this is the floor, so there's about a 4-point difference there, so that's what you're paying. Okay? Over here, you have about a 6-point difference. So that would be your risk, is 6 points. Now, a point on the NASDAQ is $4. So that kind of gives you 6 times 4 is what, guys? 24? Now, you can also just simply click on it, okay, and it shows you the maximum loss is $6. The maximum profit is $24. Okay, Now this is the one that expires at 10 a.m. Yeah, when you're expecting a very volatile movement, Dan, or you're at the top of a congestion area, these are good because the top of a congestion area is going to come down, right? If it's got diverging volume. So in this case, if you could get into a spread at the top of a congestion area, then you're doing pretty well. Do you understand? All right. That's one, okay? You could also go out to the 8 a.m. to 4:15. Do they have any around that area? Okay. Now, wait a minute. Clicked on the wrong one again. Okay. In this case, you have 37.80 here. If you believe it's going down, you sell this area. If you believe it is going up, you buy this area. The difference on this one, okay, is on this one, if you were to buy this, you have an $8 risk but a $72 potential. Okay, that is if it moves the entire width of the spread. Okay, and it gets better here. You also have another one at 4:15. You can do exactly the same thing. In this case, let me click on the right one. In this case, we have 37.30 as a floor. We have 37.20. 37.30 would be your best bet as a floor. Okay, so in this one, you're risking $14 to make $86. And because these are different expirations, that's 3 trades. Yes, 37.70. What did I say, Dan? Now, what I want you to think about, and okay, well, thank you for correcting me. It's 37.30, guys. What I want you to understand is that you have 3 trades that would have the same setup with different expirations, okay? So you could have, for example, 3 longs because you believe that we're going to have a big up movement today. You could have 3 long positions using the Nadex spreads. Do y'all understand that? So one trade can actually give you multiple trade opportunities in Nadex, which is why I keep writing about Nadex so much. Does everyone understand that? Okay, it's 37.70 that you would buy, okay, on that particular one. Now, when would you do that? Only if you are expecting a big movement. Okay, I wrote an article for Benzinga that explains how to do a spread for FOMC because normally FMO, my brain is racing this morning, so bear with me, guys. FMOC, typically when we have both projections as we do this week, is going to result in anywhere from a 30 to 45 point move. Do y'all understand that? And I explain in the Benzinga article how you do the spreads in that instance. Okay? Dan, you said, have you thought about trading too heavily on one type trade when you're trading 3 trades off one setup? Yeah. Especially if I'm in a congestion zone. Okay, and a great example is right here on the 720. Okay. Do you see how this came back to that area? I would have done 3 potentials on that, knowing that this is probably going to move up, especially if there was a market report. Do you understand, Dan? Now, I would not do that off of the lower ones, okay? Um, you know, to set an expiration at 10 o'clock, because the 3-minute is in a congestion zone, more than likely I would not do that. Why? Because there's a lot of 3-minute bars between now and 10 o'clock this morning. I only do it when I'm looking at the higher time frames, okay? All right, and again, you can do exactly the same thing on the Dow, okay? Right now, you can see you're expecting this to come down from 16,762. Okay, you look for a spread that is closest to price. Price right now being 16,720, and let me see if I can get these numbers right. Um, 16,720. We've got one at 16,725. That's the floor. We also have a ceiling at that. And you would sell the ceiling, so you would be risking $17 to make $83 if this comes down the full width of that spread, meaning it would come down to 16,625. So if I shrink this up, I'm going to put a line on here. And I'll tell you what, we'll follow this one, okay? And this one, I'm going to mark it on the chart. Let me get another chart up so we can follow this today, because we do have a market report coming out in a few minutes. Let me find Ninja Trader real quick. And I'm going to track this on a 45-minute. And set this, set it to my favorite. I know I'm talking to myself, bear with me. If I can just find this now. Alright. Let's see, 620, where am I? Here we go. Now, we're going to put the full width of the spread on here, okay? So, this is down to 1625. So, it's the difference between where your entry is down here, which currently is at $83. Okay? And your risk on this trade, and let me go ahead and do it again. Your risk, actually this changed, it's now 84. Oh. And the risk is $16. So that's your risk, and this is your potential profit. Okay? Does everybody understand that? That really depends on your account size, Dan, which is beyond the scope of this webinar. Yeah, it really would depend on what your money management guidelines are. And what you're allowed to trade as far as number of contracts. And hold on a minute, because I might actually enter this one. I want to see what the volume did. So, and I'm hoping that, yep. Yep. All right. In that case, since I'm in the trading room, I'm only going to do one contract. Excuse me. And it tells you right here, your maximum profit is $83. Your maximum loss is $17. I'm not recommending anybody to take this trade. This is my own account, and I choose to take it myself. So I don't normally do this in the room, but I'm going to today, because I like that setup. I believe that the 180 is going to dominate. We'll see. And if I have to manage my trade, I will. I actually had 17 over risk on that. And I actually had 83 as a potential profit target. So, and I'm managing 2 trades right now, so if I have to pause my screen, it's because I'm having to manage the trade. Now, what does that really mean? Okay, it means the maximum I can lose if this trade goes against me by 10 o'clock this morning. The maximum amount I can lose is $17. The maximum I can make if it moves the full width is $83. Does everybody understand that? And I am going to put this one over here, and we'll keep up with it as we go. It's not linked, so I'm good. All right, does everybody understand that one? And again, this is my ceiling, and I'm trading the 180, and I think it's going to go down. That is my basis, okay? And it's my account, and I know what my risk management is. I have entered with one contract because I'm in the trading room. So my worst case scenario is only a $17 loss, which is less than a halfway decent meal. Because you are at a congestion dot, okay? And it is on diverging volume. That is our typical setup. I believe it's going to go down. What is the target? If I get the full width of the spread, it would be down here at 625. And evidently the market report came out. It's working in our favor, so hold on and I'll show you. Give me just a minute. So right now, from the time that I talked to y'all, I'm up, what, 25 on one, 27 on the other. Both of them expire at 10 o'clock. If you wanted to take profits right now, you just simply click on it and take profit. Does everybody understand? Any questions about it? And getting out of this position is as easy as clicking right here and doing close order. You can also set a profit target if you wanted to do that as well. I've got to look at my charts. All right, let me show you something. And I know this is not our typical session, and this is just me. Okay, from where price is right now. Ooh, that's the Dow. I don't want to look at the Dow. Let's go to the ES. All right. Now, the ES, the ATR, give it a minute. This is why I don't normally trade. I get a lag here. All right, the ATR is down here at 1924, correct? So you could say, okay, when this gets down around 1924, I'm going to take my profit target, okay? This is in, if y'all were asking questions, you're just going to have to wait a minute because it's my money, not yours. So you've got a wide bar here. If this starts to retrace 50%, I would exit that trade. Now, I'm doing this with one contract because I'm in a trading room. If I was doing it with 10 contracts, multiply it by 10. Okay? Does everybody understand that? Now, would I have done that if I did not have a market report? Probably not. Why not? And if I don't get your questions, because I'm looking at the charts. I needed the volatility to move this market. Do y'all understand that now? Now, how hard was that? All I had to know is what my higher time frame was doing. I did not do it from the 3-minute. I did not do it from a 12-minute. I did it because I knew I had a congestion dot up here, and more likely than not it was going down. Now do you understand? And that was one. I could have done 3 trades. 3. Now do you understand why I am telling you that the binaries are pretty easy? You had multiple higher time frames saying more than likely this is going to go down to 1924. And this is, yeah, I'm on the Dow. I wanted to make sure I was on the right contract. Now, do you see how, and this is totally up to you, but do you see how the ES is showing a divergence on the 1 minute? And let's say that you're saying, I am not risking whatever profit I've got. You just close the order. That's how simple it is. Oop. Sorry, I've got a lot of screens open at the moment. Okay. Yeah, I did the spread, Larry. I just believed it was going down because of the 180 minute and the 720 minute. Don't do it on a 3 minute, guys. Okay? Even if it doesn't, if it moves in your direction at all, Larry, you've made money. For example, we entered this one. It has an expiration of 10 o'clock in the morning, and we're already in profit. Closing this trade is as simple as clicking this button. Now, what was my risk on the trade? My risk was 17 on this particular trade. I didn't do the capture on the ES. I should have, but I was trying to get into it before it moved because I knew it was fixing to move. Okay. On this one, yeah, would I like to get at least $34? Absolutely. Does that mean I won't take what it gives me? Absolutely will. Now, do y'all understand? It was a directional, Larry. I believed that this was going down because it was at the top of a congestion area, so I entered the trade based on that. I need to be looking at the Dow right now, though, because I'm still in the Dow. And now, you can also say, okay, it's gone down, will it break this ATR? Okay? You could use that as an exit mechanism. All of this stuff, for those of you that are in Kickstart, your trading webinar that I'm having this week, I'm showing y'all all of that next week. That's the reason it may take 2 days for us to do that one. Does everybody understand that now? No, the buyers aren't strong. You know, when you've got a higher time frame at a congestion dot, guys, and then you have a market report at 8:30, come on. Now, if you're starting to trade Nadex, would I advise you to go in with 10 contracts? No. Go in with 1 or 2 contracts and learn it. It's not going to bankrupt you, okay? Would I ever do that on the futures? No, because that bar would have jumped your stop. It just would have went right over it. Bam. And you'd been stuck in the market. And you'd be panicking. I've got a lot of articles that are actually coming out on just that. Panicking on the live edge of the market. Versus the binaries. I don't panic at all on the binaries. Okay? And remember, this is at expiration of 10 a.m. Okay, that's very important because the 10 a.m. price is what determines your profit at that time. Okay, it doesn't mean that you have to stay with it until 10 o'clock, and that's what's unique with Nadex. I can exit this trade at any time, just like I did on the ES. I swear I'm going to. I said I wasn't going to get one, but I think I am. Do y'all understand how easy that was now? Yeah, it really is. Now, what was I going to say? I've lost focus here. Okay, do you see how you have divergence now on the Dow? Okay, and I don't, it's $24 a profit. Just lock it in. You sit here and do this again. And that's the great thing about the binaries. I can sit here and do this all day long. Do y'all understand that? No particular reason. We were just looking at it, Larry. Someone asked me the other day what my favorite markets are. Anything that is in this list, I'm usually trading. Actually, my list is not full, so I had some trouble with my charts this morning because of my cable provider. Okay, now. And I hope I don't lock my platform up. Okay, I'm not. Let's see. That one's expired now. This is normally everything that I'm looking at at any given time in Nadex. So that tells you how many different markets I can trade. Okay? And these spreads and the binaries are offered on both the Forex commodities and indices. Okay? So in this example, do you see how this pulled back to the ATR? Okay? You could have done a spread to the upside. First thing this morning is say, hey, this is going to go back up to the congestion dot. These congestion areas are going to be your favorites when it comes to trading higher time frames. Do y'all understand? And this is one I normally don't trade. I normally do not trade the USD Canadian. But give me a congestion zone on a higher time frame with diverging volume, and I'm all over it. Because we know typically it's going to go up here, and we're getting a very low risk entry using Nadex. Okay? And I'm sorry I got totally off topic there. We were going through the markets. Okay. Let's complete going through the markets. Okay, right now we have on crude, we have a potential magenta peak coming in telling me this is going to go down to 103.39. We could do, again, the same exact thing. We could have looked for a spread to the downside right around 105.88. I don't have an answer to that yet, Larry. I'm trying to find out, and I will try to find out for y'all, but I don't know at this moment. I haven't had to deal with that yet. It's the end of the year. Well, I hadn't intended on doing that, but it is what it is. So again, using exactly the same methodology that we just did on the ES and the Dow, we could have done crude, and you would be in the money on crude too. Okay, so when you're asking me how many potentials do we have, let me show you the easy answer to that. Do we have a market report on any market today that is in red? Yes, the British pound, the euro, the dollar, and the dollar. So any markets that are correlated to those, I have trade zone. Now do you understand? And all you have to do, because I'm not kidding here, if you have a market report and you know how to read the volume, then you potentially have a trade on any market that is affected by the market report. Okay? The volume in our indicators, okay, will tell you or indicate which direction that market report is going to go in. Does everybody understand that? And why? This is what you hear about hidden buyers and hidden sellers, okay? Now, look, the market report, the building permits came in less than anticipated. The core CPI came in better. Do you see the movement that was generated was to the downside? The market movers, as they're called, had already positioned themselves to the downside. That's the reason you could see it in the volume. Do y'all understand that now? There is always, I should say it this way, there will always be the possibility that we are wrong. That is part of trading. What do? You protect your risk. You protect your account. You protect your capital. That's what Nadex gives us the ability to do. Well, in this case, what was it, Artemin? You're getting a magenta peak. You already got the magenta peak down here. It's retracing. Is it not? If I put the volume on this, I already know it's going to lock up my computer, so I can't. This is the way the THD tools work together. Dan, I'm glad you said to record this morning. Now, if we had been in this live, okay, would we have made that full potential movement? Probably not, because you would have had a lot of slippage. You're trying to jump in as prices moving down. You know, you'll get slippage. We all know that, okay? Going back, the Dow and the ES is probably the best example of it. Let's say that you thought, oh, we're at a congestion dot, so we're going to go up. You could have got killed on that trade. What? My worst case scenario was 17 bucks a contract. Do you think that's going to stress me out if I lose $17 a contract? After the things I've suffered on the live edge, I don't think so. That is exactly right. You will not get any slippage and you will not get jumped over. That's the reason we can take advantage of these volatile markets and volatile market reports. And I'm going to tell you right now, it took me a while to learn to do it on the futures, and you don't want to know how much I've lost trying to do it. Now, that's just the spread portion of it. The binaries, whole new game there. And it gives you even more options. Now, I could tell you that this 12 minutes said, you know, it was going down. It did say it was going down. Would I have traded a market report from that? No, I would not. And yesterday, the people that were in the webinar, we were studying how to read price, how to read volume. This is why it's so critical. If volume is indeed a leading indicator, then why are we not using it to lead us into our trades? Understand? All right. Now, typically we all know that the indices move together. Okay? So, in essence, I'll tell you what I'm going to do. You could have done the Dow. What is that, a 45 minute? I'm just going to put it on a 3 minute on all of these. We could have done a trade on the Dow. We could have done a trade on the DAX. Hold on. We don't have the NASDAQ up yet, so let's do the NASDAQ. I might max my computer out, so if I crash, it's because I'm trying to show you how many trades you could get. Alright, there's your NASDAQ. There's your ES. And it wouldn't be complete without the Russell, because I know some of you trade the Russell. There's your Russell. Alright, so that's 1, 2, 3, 4, 5 markets. Okay. You could have done 5 trades, or you could have done 3 spreads on each market, giving you a total of 15 trades. Which one would make the most money? The one with the shortest expiration, which is 10 o'clock. All of them were identified off of the 180. You would have entered it before 8 o'clock. I was trying to show y'all how to do it, so I entered late because I was writing a gold article this morning. So for those of you that want to know how many possibilities you have with Nadex, how many trades can you get in the morning? That would have been 15 trades. One setup. Yes, it is amazing. So if I tell you something has amazed me, it has really amazed me. Now, do you understand, guys? That was Regal agreeing with me. Any questions on that, guys? So when I call Nadex like the Walmart for traders to really make some quick money, now you know what I'm talking about. Now, could you do that with, a small account? I would say no, because you're not using proper money management. Okay? But you don't have a margin requirement. All you have is whatever premium you pay because that is what your risk is. Okay? All right, let's get back on topic here because y'all have really got me off topic. I was just so excited over that this morning. I love it when I see price at a congestion area on a higher time frame. Now you know why I talk about the congestion areas so much. The congestion dots and the ATR. They're phenomenal places to take trades. I'm sorry, we have a cat outside the office and it's driving my dogs crazy. All right, so we went through, I'm sorry, I'm totally off topic this morning. We went through the ES, we went through the Dow, we went through the NASDAQ. The Russell is pretty much going to be doing the same thing. Very seldom will it trade against all of the other indices. Okay, yeah, too much coffee this morning. You do see that this closed above this congestion dot. So to me, this was probably the one that I would have eliminated from my arsenal of trades. Okay. Could you have still taken it because you had divergence? You could have. But, knowing that this was not the same setup as my others, I would have eliminated this one and taken the other 4. So that would have put me down to 12 trades instead of 15, 16, whatever it was. Okay. And we also had crude, of course. I've already shown crude, if I can talk this morning. Let's see here. Now, on the currency side, the Aussie is really oversold, but I'm not seeing a lot of weakness in the dollar, so I haven't really messed with that yet. Now, I did have a question from someone regarding the prices on the Forex. Okay? Yeah, you didn't have volatility there, Larry. The spreads, when you're taking a trade in spread. Okay. Sorry, we're getting a lot of changes in the market analyzer. When you're taking trades using spreads, volatility is your friend. Okay? Notice yesterday. Okay? And this is a great example of when I really don't want to do spreads. Let's see. This week. Yesterday morning, there's nothing red there. Okay? Could we anticipate volatility? No. What's going to kickstart the market? I don't see anything that's going to kickstart it. Okay? These are all orange reports. Orange reports don't kickstart the market. Red does. Okay? So those are the ones you want to focus on, spreads when there's red market reports that will cause the market to go into a volatility state. Yeah, it's 180 degrees from what we used to do. As far as futures. Futures, if you're trading the actual future, you don't want that volatility. It'll kill you. Why? Because they can jump your stops. Okay, and if they jump your stop, you better be sitting there, and even then, you're going to get burned. Okay? You're not going to get burned with having a capped risk. Now, do you understand? Any questions about that, guys? Oh, yeah. That is exactly what you want, extremes. Okay. It does take your head, it takes you a while to wrap your head around it. I totally agree, Dan. But when you do, it's some of the best to me, it's relaxed trading. Okay. And a lot of times you do get a really nice momentum move. Do you see all of the magentas today, guys? This is a day, to me, this is going to be a good trading day. Why? Because everything's magenta. I'm like itching to get out of the room because I know I'm going to have some trades today. And that's just being totally honest with you. You know, I want to trade when I see there's volatility days. Now, if it's not a volatile day, I'll just go into binaries. Sometimes I do both. I'll do binaries and spreads. No, it's tomorrow. I'm so excited about it, I can't stand it. I'm like, please, 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 come on, come on, come on. I've never been so excited over a FOMC day. Yeah, basically magenta tells you there's money days. Those are your money days, okay? When you've got it all just in white, those are not your money days. Oh yeah, I never ever traded FOMC days before. You know, they did have what they called back when Greenspan was there. They called it the Greenspan trade, where they did both sides of the trade, because normally it goes down and then it comes up. Some of what I've been researching, actually, if it goes down, it will come back up, but if it goes up, normally it don't come back down. It's just what I was seeing on a recent article I was doing. All right. Any questions, guys? I'm sorry I was just kind of all over the place today, but I did want to show you just how many opportunities you get. You know, just multiple, multiple. Okay, that's what I was going to go over. Give me 5 minutes. I need to go grab me a cup of coffee, and I'll be right back, and I'll answer your questions, okay? Okay, I'm back. Artemin, you're asking, is the 12 and 45 the only two magenta peaks I consider? Nope. I'll do the 180, I'll do the 720, and I'll do the 1440. Just depends on what the expiration is. Do you take the currency trades in the Forex or futures? Nadex is always based on the spot side, and let me show you. Okay, flip. I'm trying to find my Ninja control panel, so give me a minute. Okay. And let me show you, because I did have a question on this, because you can trade just from the futures, but you know, you've got to know how to do it, guys. And let me show you. I didn't know I was going to do this, or I would have set all this up for you. Okay, here's the British pound 3-minute chart. This is the British pound US dollar. Oop. Okay, now I'm going to change this one over to the British pound. And this is something that a lot of my clients ask me because they don't necessarily have the data for the spot Forex. Okay, now you see the patterns are the same. It came back, tested the ATR here, came back, tested the ATR here. I do prefer to use the futures volume versus the spot Forex volume. Why? Because this is regulated, this is not regulated. Okay, you have numerous, and I do mean numerous, brokers that deal with Forex, okay? And your volume is dependent on your broker if you're dealing with the spot side. On the future side, you pretty much have exactly the same volume. Do y'all understand that? And I did a presentation at Ninja Trader. It's posted on my website, and I think it's also posted on YouTube for the Ninja Trader educational site. Okay, now let's go and look at the Forex binaries. Okay, now in this one I'm going to look at the GBP US dollar. We'll just look at 10 o'clock this morning. Now in this you don't see prices. Okay, this is view as pairs. Okay, let's change that to list. Now under the list view you do have the indicative index, so that's pretty much telling you where price is. Okay, you can also see where price is by going to pairs and looking for the one that is closest to 50. In this case it would be 69.52. Why does that matter? Because the we're getting a lot of peaks. The futures contract, the price difference is different from the British pound US dollar. Nadex, the underlying for all currencies, will be the Forex pair. Does everybody understand that? Now I want you to get your head wrapped around this. Okay, so if we come back to Nadex and I shrink these down so that we can see both, this is, you know, that the ATR is at 69.49 here. Price is at 69.42.43 now. Down here it's at 54. Okay, you wouldn't know that because you wouldn't have this chart. But what I would know is to look over here and say, okay, which one is closest to price? If I have diverging volume, this is closest to price, so I would short. Then once you do short that, it will appear here and you will have the price right over here in the indicative index column. And this is what I would be watching. So if you want to actually trade the Forex pairs, it can be done, but you have to know these differences. Does everybody understand that now? Now, when you first start trading it, you might look for these lower numbers, you know. You don't want to do that. Or you might look for these higher numbers and say, oh yeah, that corresponds to this. No, it doesn't, because it's not at the 50-50 mark. That should trigger off bells in your head. This is not at the 50-50 mark. In fact, right now there's 88.5% of your traders that are actually believing it's going to close below this price. No, I'm sorry. It's 93% that believe it's going to close above 42. So if you're trying to short that, you're probably going to be in trouble. So again, if you know how to read the screens, you can tell, oh, that's not right, something's wrong. And of course, if you send me a question or an email on it, I can explain it to you. Does everybody understand that now? Now, if you're using NinjaTrader, you can actually recommend that you use Kinetic for Forex. It's $55 a month for the Kinetic, and then I think it's $25 a month for the Forex. I do recommend that over like FXCM because the volume in the charts load faster using Kinetic. I'll tell you that right now. Now, if you have TradeStation, you get Forex data free. Just make sure you use the volume off of the futures. All right, any other questions, guys? Did I answer everybody's questions? Did I miss anybody? Rich, did that cover yours? Is everybody hearing me okay? Okay. Yeah, it's a lot of information, and when I want to expose you to a little bit this week, Larry, which is why I'm doing this in the trading room this week, because next week you're going to be submersed in it, in the webinars that we've got going on. All right, guys, well, I want to go ahead and end it because I do want to trade the market opening this morning. I hope all of you enjoyed it. I know I did enjoy it this morning, so even though I went off topic a lot. Thanks, Charles. Everyone have a wonderful day, and I'll see you tomorrow morning, same time, same place. I'll try to stay on target tomorrow morning.